Hello everyone, welcome to the Ichimoku hourly analysis for the SP 500 for Monday, March the 7th, 2011. Well, the market continued the trend to the upside in the first hour of trading. The market gapped up from the previous day's final hour of trading. Looked like the market was quite bullish in that first hour of trading with a green bodied candle and making a higher high and a higher low, and actually set up a window, which is an area of potential support here in this case in candlestick charting. Unfortunately though, the bulls were not able to go on with this move that actually traded within the zone of resistance that we highlighted previously. If you recall, we're a little bit cautious of the breakout to the upside. The breakout occurred from a flat part of the cloud, and we always have to be a little bit cautious of those. We can get false breakouts quite often where the market doesn't go on with the move, and normally that would be a bullish signal in Ichimoku charts. In this case, we had a 1 hour continuation of that move to the upside, and then a very large red-bodied candle in the second hour of trading. Now, we were also wary of this bullish breakout to the upside above the cloud in that final hour of the previous day's trading because of this strong overhead resistance that we had. And we can see here this zone, which was previous support and has acted on as resistance on a few occasions now. In that second hour of trading, the market actually set up a tweezers top pattern where we had these two highs of the candles side by side that were fairly equal, and we had a very large bearish move that took out the window that was opened in that first hour of trading. A very bearish move. That hour of trading was that bearish that it took out the previous hour of trading's candle and the hour before that as well, the body of that candle as well, so a very, very bearish move. The market also failed to find support at the Ichimoku cloud in that hour of trading, and we had a breakout to the downside, which is a bearish indication, and that broke out from an area of the cloud that wasn't horizontal, so that was probably a more significant breakout than we saw previously to the upside. However, we did have to take into account the support down below. So we had this very strong support in this area around 1312, and we can see here on these candles where we had 4 attempts at that area, and the market was trying to bounce off there. We also have good strong support down 1309 and down into this zone that we've highlighted previously. And we can see that the market in the third hour of trading actually went on with a move with another bearish candle, and in the hour of trading after that. The only thing is for the bears, they were in the ascendancy. They were making a series of lower highs and lower lows, but the size of the bodies was becoming smaller and smaller as the trend developed and as we traded into that zone of support. That means that even though the sellers were making net bearish progress, the amount of net bearish progress was becoming less and less. So the sellers were actually making less and less momentum in those terms. The hour of trading that we're highlighting at the moment was the one that set the market up for a potential change of trend to the upside. We had a spinning top type candle, and spinning tops are candles of indecision. We can see that we have a very small body, and the body had turned green, so instead of the sellers making net bearish progress, the buyers are making net bullish progress, although only a very small amount, not a terribly significant amount. But we did have the candle with a shadow on the top and a shadow on the bottom, and that represents buying coming in and selling coming in at the same time. A little bit more buying coming in because we have a slightly larger shadow on the bottom than the shadow on the top. And in the second last hour of trading, the market actually had a candle with a larger green body, which means that now the buyers are making net bullish progress, and that was about the same as the candle from 2 hours previously, but the opposite actually. So we had a breakout from the top of this zone of support, and we know that top of that zone will act as resistance for this market. And in the final hour of trading, the market actually took out the next area around 1312 The market, however, failed to hold above that area and closed down below it, so making that fairly significant for the market. We also tested towards the bottom of the cloud and towards the Tenkan-sen, and the market found resistance in that zone as well. Another spinning top type candle though, so as the market was rejected to the downside from the resistance overhead, we saw the market trade back down into the highlighted area of support and find buyers coming in. So a very indecisive candle to close the trading for the day. The market, again, is now set up for a potential lower high and lower low because of that indecisive trading. It's not really the way that we'd like to see this first time frame uptrend develop. So we do need to watch the low of that candle, which is at 1307. We do need to bear in mind, however, that if the market does come off and does start trending to the downside, then we do have this very big area of support. So we do need to be careful about taking some of these signals while we do have strong support down below, but also very strong resistance up above. And the resistance up above is given to us by the cloud. We have the Tenkan-sen and Kijun-sen, which will hold as potential resistance, and also these areas at around 1325, extending up to 1332, 1333 roughly. Now, in Ichimoku clouds charts terms, we are trading down below the cloud, so the market has an overall negative bias, although we are oscillating above and below the cloud, so it says something about the market. It's having a lot of trouble making its mind up in big picture terms at the moment. The market, however, is trading down below the Kijun-sen, which means that we're bearish in the medium-term time frame, and we're also trading below the Tenkan-sen, that's the blue line here, which means that the market is bearish in the fast-term time frame. Now, both of those indicators have turned flat, and that's reflecting this indecisiveness in the market and this market oscillating around these two Ichimoku indicators. With the Kijun-sen being flat, it tends to attract price action, and that's what's happened here on a few occasions. And in this final hour of trading and the previous hour, that's exactly what's happening. The market is being attracted back towards the Kijun-sen. So for the next day's trading session, very indecisive market at the moment. We will need a few trading days to resolve these market conditions. We do need to be very wary of the market over the next few trading days. We really should be careful of any signals, bullish or bearish, that we're going to get from the market until we have resolution of the market trading through either the resistance to the upside or through the support down below.